Welcome back. We have been seeing top signal after top signal after top signal. Well, now we're seeing Bitcoin getting painted on a plane with the lettering 10x. Well, I'm not so sure about that. In today's video, we're going to be talking about XRP and the ISO 20022 nonsense that has been going on for years in the XRP ecosystem. We're also going to be talking about the JP Morgan debacle with MicroStrategy. We're going to talk about Zcash, the digital asset treasury companies, Hyperliquid, and more. We have a lot to discuss, a lot to go over, and really understand if the bubble has burst in crypto. This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. That way you never miss a new video. Sometimes we talk about the macro view, the zoomed out picture of the entire market to understand when is a good time to invest, what is a good thing to invest in. And remember, these are just my opinions and analysis on the market. None of this is financial advice, but I would appreciate if you guys give the video a free thumbs up. We've been uploading every single day since 2018. And so far this year, we have been so on the ball and so correct in our calls on where the market is. So let's get into it. And we're going to start right here with XRP. Let's get this video started. Now, as many of you know, we are somewhat critical of XRP on this channel, specifically the fact that Ripple has not integrated XRP in as a mandatory feature and use case in all of their products, and the fact that Ripple continues to sell XRP on the open market. Well, now the ISO 20022 standard has now gone into effect, I guess, with the banking system around the world. And this is something that the XRP community has been pushing literally for years, that XRP is the only compliant ecosystem, the only compliant crypto, and that the banks are going to choose XRP. Well, the full implementation of ISO 20022 as an active global financial messaging framework has refocused attention on various statements that have circulated within the digital asset community for some time. Recent posts by crypto enthusiasts drew focus to the issue by referencing the official ISO website clarification on the widespread misuse of the phrase ISO 20022 compliant cryptocurrencies, saying this: "Congratulations, you did it. ISO 2 whatever is still live." Not only did nothing happen, but on the website, they decided to call out all the people spreading misinformation, saying, are there any cryptocurrencies that are compliant with this ISO standard? And it says there's a lot of confusion and misleading information on the web referring to the compliant cryptocurrencies, but those statements are not correct. Well. What does this mean for XRP and the rest of crypto? Clearly nothing, because nothing has actually occurred. XRP is still not the world reserve currency. It's not being used by the banks. And by the way, top signal, Dave Portnoy just a few weeks ago bought $1 million in 2 tranches of $500,000 each of XRP, along with some other cryptocurrencies. And again, this just goes to show you guys are so ahead of the curve when it comes to understanding how these market cycles work and understanding when to buy, when to sell, when to do nothing in the markets, because we've been talking about the Bitcoin halving cycle forever. And although there's a lot of people who think that the halving cycle's over, there's no more 4-year cycle, we have an extended cycle, it's all nonsense. It's all complete nonsense. And these kind of things, along with Bitcoin getting printed on a plane, and we're going to get to that in a few minutes. These are literal top signals where the market is falling. We're at the end of the cycle. We're rotating into a bear market, and some of the biggest money in the world have no understanding of how this cycle actually works. Besides the fact, long term, obviously the thesis is still going to play out. Crypto is, I think, going to continue to grow bigger and bigger and bigger. But what is the actual data showing us? What is the sentiment around the world showing us, right? Well, we're now seeing JP Morgan closing Strike CEO Jack Mallers' accounts, spurring crypto debanking concerns. And this also goes into what we're going to be talking about a little bit later in the video with MicroStrategy, where the MicroStrategy bulls, MicroStrategy, from a price perspective, is down more than 50%. I told my viewers back in August, back in June, July, August, September of 2025, I told my viewers when MicroStrategy was in the $300 and $400 range that At a minimum, it should be $225 at a minimum, right? If not much lower. And we're lower. We're lower by now. So we've had basically about a 40, 50, 60% drop since the middle of the year towards the end of the year in just half a year. And it's not like we're geniuses or we can predict the future. We just understand how the cycles operate. And we understand that MicroStrategy was accelerating their dilution. They were accelerating their purchases at the literal top of the market. And the bulls were like, oh my God, this is the most bullish thing ever. And it's like, no, it's actually not the most bullish thing ever. And so, now they're saying, well, this is JP Morgan is trying to take down crypto. They're trying to short MicroStrategy and take MicroStrategy and all the digital asset treasury companies down. But here's the deal, guys. Why Jack Mallers was debanked, I don't know. I mean, at the end of the day, we've been hearing constant flows of debanking occurring, right? Maybe it's the connection to Tether and, the bank doesn't really like Tether. I don't know what the situation is, but I really don't believe that it's like this big grand conspiracy because again, a little bit later in the video, we're going to go a little bit more in depth about this, but I want you guys to understand, like MicroStrategy is so small, like to JP Morgan, I really don't think that they care that much about it. I mean, their new office, this is from their own website. Their new office is in New York, was built for about $3 to $4 billion, okay? But look what it reads here. A new study by this company shows that JP Morgan Chase contributes $42 billion annually to New York City's economy, supporting an additional 40,000 jobs across local industries. Like $42 billion just in New York. Think about what they're doing around the country. This is in the hundreds of billions of dollars. So what is going on with MicroStrategy is such a small piece that I'm sure they don't even care about it. And all of these calls to close accounts and all of this nonsense, and again, we're gonna get into that a little bit deeper later in the video. But before we get there, let's talk about Zcash because there's a lot of stuff going on with Zcash. So recently we've been kind of briefly talking about Zcash because there's been a huge run up in the price of the coin. Whether like what this indicates, I'm not too sure. I don't know whether this indicates that, we're in a bull market. I don't know whether this indicates that we're at the end of the bull market for Zcash specifically. But Winklevoss twins are betting on Zcash with new treasury firm targeting 5% of the supply of the new privacy coins supply. Now, if you guys have been following my videos, and if not, make sure you guys are subscribed. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. And don't forget to give the video a free thumbs up as well. Again, these are just my opinions. You could disagree. Let me know why you disagree, though, down below. But most of you guys get it. You guys agree. And you guys have been probably making so much money in this market. It's unbelievable. But anyway, we've been talking, and recently on my video, I showed you guys the Winklevoss tagged wallets on Arkham Intelligence show that Winklevoss twins have been selling their Bitcoins all year with an acceleration in the sales towards the end of 2025. And this would kind of go into the thesis or the theory that the Winklevoss twins are moving more heavily into Zcash and out of Bitcoin. And again, most whales have been selling some of their Bitcoin, if not all of their Bitcoin, to take profits out of the market because they understand how these market cycles work. And they understand at the end of 2025, we're well past the 18 months after the Bitcoin halving cycle, which historically is the time where we start to rotate into a bear market. But the bulls, they are just going to continue to buy. They're going to continue to say there's no bear market, that we're not going down in prices, even though we went from $130,000 down to $80,000 over the course of like 2 weeks. And they're going to say, oh, no, we didn't go down. Cryptoviser, what are you talking about? You're just spreading FUD. It's like, no, that's what the chart shows. Like, that's literally what the chart shows. But anyway, there's going to be rotations, right, into other assets. Because remember, when the value of these coins drop, the money doesn't disappear. It just moves to other assets, whether it's dollars, whether it's altcoins, whether it's stocks, whether it's AI stocks. It just moves to other assets. But I don't know whether this is a good or bad idea for Zcash or the Winklevoss twins. And this could also indicate why we're seeing this huge pump in the price of Zcash from September going from $50 to over a 10x in November at over $50. So the Winklevoss twins are rotating to Zcash. Cypherpunk, a brand new crypto treasury company backed by the Winklevoss twins, is deploying over $50 million into this coin, which is a fork of Bitcoin. As of the launch of this company in beginning of or middle of November, the firm already holds 203,000 of the coins and is shooting for 5% ownership of the entire supply. Tyler Winklevoss said privacy becomes a rare, vanishing commodity. We feel strongly Zcash could become a meaningful percentage of Bitcoin's market capitalization just on the merits of it being a privacy hedge or insurance policy to Bitcoin's transparency alone. Now, again, the coin has already gone up 10x, and this is when they're buying or they have been buying. And again, this could also indicate why the price is going up so high because they are buying so many coins. I mean, if we just do the math at let's just say a lower price, let's just say like $250. Okay, so $250, and they said they had 230,000 coins. That's $57 million. I mean, that's still really not that much. 5% of the entire supply would be, I think, well, let's just do the math. 21 million coins, the same as Bitcoin, times 5% equals 1 million coins. So they're basically 20% of the way there, which is interesting. But if this pump is because they're buying into it, we just have to think about like what has happened to these other Bitcoin treasury companies, right? For instance, DeFi Development Corp. This was a Solana treasury company that made the announcement at the beginning of the year that they were going to be going into Solana, right? Pumped all the way up to $35 and then dumped down to $6. If we think about Backed, BKKT, on the stock market, you know, it pumped based on them hiring Mike Alfred as an advisor, and then it dumped right back down 70%. And so this is kind of what is going on with the treasury companies. They're all kind of pumping and then dumping. Now, for the Winklevoss twins, obviously, this could just be kind of setting up for the next bull market or setting up for the next cycle. But again, why are they buying at all-time highs, right? They should raise the money, wait until we get back down, and then start buying. But you know, I guess everybody's not a bottom buyer. A lot of people seem to be top buyers this cycle, which seems so top signalish, right? We got Dave Portnoy, we got the Cardones, we have a lot of retail in the market buying the top, saying it's not the top when it literally is the top. And so there's a lot of other things going on here. Now, crypto treasury firms buckle as the crash erodes nearly half of the combined market caps of all of these digital asset treasury companies. Crypto's latest crash pushed combined market cap of digital asset treasury firms down from $176 billion to about $99 billion. And it maybe a different valuation by the time you're watching this video, but the trend is obviously down. I mean, we're seeing this across the board with DeFi Development Corp, with Bitmine, with SharpLink. I mean, these are all down precipitously since they made their announcements. I mean, look at Bitmine Emergent Technologies. It went from $135 in July when we called the top of the market, and it's down 80%. If we look at SharpLink, this is Joe Lubin or Consensus's digital asset treasury company. Again, it went from $79 and it's down 89%. If we look at Nakamoto, this is a Bitcoin treasury company. Again, 98% down, right? I mean, they're all trending down. And by the way, they could still go down another 98%. So there is a lot of risk here in the market. And a lot of people are misconstruing these dips as a time to buy. In my view, the market is still in the very early stages of the rotation into the bear market, right? We know, based on the Bitcoin halving tracker, from the top of the market to the bottom of the market is approximately 1 year. Actually, exactly 1 year. But we'll just say approximately. So we're just starting the downtrend because the top of the market effectively was in July for most of these treasury companies. But for Bitcoin, it was in the beginning of October. And so we have at least, another 8, 9, 10 months until we reach that bottom of the market. Now, these Bitcoin treasury companies, they've fallen based on insider selling, based on, I think, the market anticipating the crypto markets falling, and the fact that they actually have no real cash flow. And so these are risks because as Bitcoin and the other cryptos continue to fall, which I believe that they will over the course of time, this is going to pull these treasury companies down even further. And we've started to see selling in these treasury companies, but we haven't seen any collapses just yet. And we will. I don't know whether it's going to be one, 10, or 50 of them, but there will be collapses of these companies. And this is what we have to look for. And this doesn't just go with the Bitcoin treasury companies. It also goes with the Bitcoin mining companies that have pivoted to AI. As you guys know, most of the Bitcoin treasury companies that pivoted to AI are down significantly. And then you have some that are only down a little bit, right? 45% is still a lot from the top for Iris Energy, for example. But they have the potential to continue to fall as you're going to see, the AI bubble or a lot of these AI companies correcting from their all-time record highs. And that brings us to Hyperliquid. Now, we know Arthur Hayes is a big Hyperliquid fan and follower, but he responded to this letter from this user, 74,000 followers and the founder of the roll-up company. He sent an open letter to Jeff and the Hyperliquid team about the upcoming unlocks. And effectively, this is talking about, the coins being unlocked, right? Because Hyperliquid is still a fairly new ecosystem. And what we see, you could see this perfectly with like SWE, for example. It pumps, but that's also because there's very little liquidity in the market. But as they start unlocking the coins, the pumps turn into dumps. And so this is where the Hyperliquid ecosystem is really concerned about dumping of these coins. So this user said, I want to start by saying the community knows that you and your team are going to do what's best for the business no matter what. This has been one of the best assets, meaning Hyperliquid, to own the entire world for the last year. Even though the company has less than 20 people, you still profited hundreds of millions of dollars from fees. You're locked in. You want to play the long-term game. I think we can all see that and firmly respect it. He says it's why we love Hyperliquid. It's why we participated for months and years leading to the launch, held hype for nearly a year, and believe you guys will dominate for the next few years. You've honestly blown my mind with the impact you've made on the space and helped crush this cycle. Most everything else sucked for us, unless you nailed the mention casino. He says, we all know that the game is on life support right now already. Okay, he's basically telling you that the smart money knows the cycle is kind of coming to an end. But also, you have to keep in mind with Hyperliquid, it's a perpetual futures DEX, right? Coinbase and most of the other major exchanges have rolled out some form of perpetual futures. And Aster, aka Disaster, is basically now a competitor. And Hyperliquid basically had no competitors up until Aster launched. Now that Aster's there, it's taken away major market share. Plus, it's kind of backed by Binance. So we know that's where a lot of the volume is going to be, aka the fees, aka the revenue. And so what is Hyperliquid going to do if that market share that they've had continues to get eroded and eaten away? So he says, we all know the game is on life support and people are finally coming back to the real value investing. It's only naturally that they poke at the pending unlocks or coin unlocks of Hyperliquid. The team and airdrop recipients finally will be able to sell is going to ruffle feathers until you address the community head on. The entire market has PTSD from the destruction of on charts with VC-backed vapor. Hype is the polar opposite. You've set the standard for programmable token mechanics at scale. It makes sense to set the standard here too. Effectively, this user wants the founding entities to basically say whether they're going to sell the coins or whether they're not going to sell the coins. Arthur Hayes responded to this and said, sir, just in simple math will tell you the only way hype overcomes the uncertainty is massively growing revenue. Even if the team pinky swears not to sell, there's nothing holding them to that. So you have to assume an over 0% amount of daily sell pressure, basically saying they're going to sell. It's just a matter of how much, but you have to assume that there's going to be sell pressure in the market. He says the market is already discounting this because the, I don't know what P is, whatever fully diluted value fell 50% since the price all-time high in July. And again, all-time high in July. that was when we called the top of the market. Because again, even if you think about like Circle has come down precipitously since it went IPO because the IPO price was $30. It pumped up to $300 and it's almost back down to $30. Why? Well, the market is pricing in unlocks, which are happening in December. And so anybody who is involved in the IPO gets their stocks unlocked in December. And so if they're over $30, which is what their IPO price was, and we're rotating into a bear market, which we are, they're probably going to sell their shares. And so the market is already pricing this in. So effectively, the top of the market for everything was in July and June and August because that was when the market was pricing all of this other stuff in. We knew when the unlocks were going to happen. We knew when these companies were going to be able to sell off. And they are. And we're rotating into a bear market. So why would they not if they're above their buy price? And so this hyper liquid situation, again, hyper liquidation, that's really what the company or the coin is, hyper liquidation. They're going to sell. I mean, Ethereum has sold, Cardano has sold, ICP, I'm sure, has sold. Like all the inside entities have sold into pumps. It's just a matter of how much they're selling and what it's actually going to do to the sell and buy pressure in the markets. And that brings us to this. Off-Chain Labs has now challenged Vitalik Buterin's RISC-V proposal, saying that WASM or WebAssembly is better for Ethereum's Layer 1. And so Off-Chain Labs, the core developer of Ethereum Layer 2 Arbitrum, has challenged Vitalik Buterin's proposal to transition Ethereum's execution layer to RISC-V or RISC-V, publishing a detailed technical post arguing that WebAssembly or WASM offers superior long-term advantages. In a November post on Ethereum Research, 4 Off-Chain Labs researchers contend that the RISC-V, it currently excels at generating ZK proofs, that it doesn't make it the right choice for how smart contracts should be delivered and stored on Ethereum. Now, Buterin floated this idea earlier in the year. We've talked about this on the channel, arguing that the change could slash on-chain ZK proving costs by as much as 100x. But some of the researchers over here at Off-Chain Labs said, we support these goals, but question Vitalik's implicit assumption that one ISA can optimally serve both ZK proving and smart contract delivery. And so again, right, when we're talking about the development of these ecosystems, first of all, this cycle, we really haven't had a lot of like things to look forward to. Like in previous cycles, a lot of these chains, a lot of these cryptos, they were promising, oh, we're going to do this. We're going to upgrade this. We're going to do this. We're going to be able to do this. And this cycle, there's been almost none of that. It's kind of like the market and the developers in the market, besides doing great jobs at what they do, they just kind of expected, oh, well, this is the Wall Street cycle. And I think this is where a lot of people got tripped up because they just expected, well, Wall Street's in the game, so they're going to start buying into cryptos, which they have, and this is going to make everybody rich forever, which it hasn't, as we've seen with most of these treasury type companies. They've all gone down, over 50% before the cryptos have even fallen. And so this cycle overall has been very disappointing in the crypto world. And this is one of the reasons that I said to my viewers long ago, I want to be out of crypto by the end of the cycle, completely out of crypto, full reset, right? That doesn't mean I'm going to be out forever. But moving forward, like I've told my viewers on this channel that the longer you're in crypto, I think it makes you more of just a Bitcoin maximalist, right? Because everything else seems like just a grift, right? Everything else seems like just a money grab. I mean, literally just a money grab. And that brings us to MicroStrategy, because Peter Schiff said this recently that firms, including Strategy, will have to sell Bitcoin they purchase as their business models collapse. And by the way, for those people who think that he's wrong, well, he's not, because many of these Bitcoin treasury companies are already selling their coins. Nakamoto just sold coins to buy into other Bitcoin treasury companies. SQNS Sequins already sold Bitcoin. Eatzilla already sold Ethereum. Another Bitcoin treasury company, I don't have the name off the top of my head, also sold Bitcoin. So he is correct here. But meanwhile, we're starting to see top signals from some of these MicroStrategy and digital asset treasury bulls. The Cardones are continuing to buy Bitcoin, and Grant Cardone posted this: "I'm not bullish on real estate and Bitcoin. I'm committed. Bitcoin will redefine how real estate is purchased. I'm so convinced I put it in on the wing and the belly of my little plane." Now, again, 10x with Bitcoin in the middle. These are top signals, right? I'm not saying that Bitcoin is not going to be good in the long term, right? But it's not really going to redefine how real estate is purchased, right? I mean, they're talking about probably collateralizing Bitcoin or taking loans out on Bitcoin to purchase properties. I get that. But you could already do that today, you know? And yes, over the course of time, Bitcoin's going to go up in value and price. But as we talk about regularly, the percent, everyone's top chasing still top chasing. And what do I mean by top chasing? What I mean by top chasing is that people are still chasing the percentage gains that we got last cycle, the percentage gains that we got the cycle before that. I mean, remember in the middle of the year when I did call the top of the market, I showed you guys a video, Saifedean Mamous. Just go type in Saifedean and Saifedean top on X, and you'll see the video. And he's interviewing with a Bitcoin journalist, and he's like, you know, we're coming up towards the 18 months after the Bitcoin halving, and this is basically the top of the market. And she's like, wait, what? You don't think we're going to hit 200,000 based on the previous cycle? We should be much higher than where we are. And it's like, yeah, but we're not in the last cycle. We're in this cycle, and this cycle has had diminishing returns in terms of percentage gains. It doesn't mean that we haven't had good gains. Of course we have. From the bottom of the market, $15,500 to $126,000, that's almost a 10x, right? It's about an 8 or 9x. This is unbelievable gains that you don't get in many asset classes in that period of time. But if you look at the first cycle percentage gains from the bottom to the top, second cycle bottom to the top, third cycle bottom to the top, they're all lower every single cycle. And a lot of that also has to do with, you know, the market cap and the amount that it takes to get to those next levels, right? And so let's say the bottom of the market is like, let's say $60,000 this cycle. Well, that means, I mean, are we going to get to 600,000 in this next cycle? I don't think so. I think that we're going to get to maybe 300,000, maybe 400,000, right? Which is still a pretty good gain, but it's less of a percentage gain than most people are thinking, less of a percentage gain than the previous cycle, which is the cycle that we're exiting now. And I don't think that a lot of these big players here understand this diminishing returns, don't understand the Bitcoin halving cycle fully, because now we're starting to see this whole JP Morgan boycott. Cardone said this: I canceled my JPM account and moved my entire account to Wells Fargo. Also, I didn't use Chase credit card if you're worried about fraud. More to come. And basically, a lot of this has to do with, you know, the MicroStrategy crowd, you know, blaming effectively JP Morgan, because JP Morgan believes there's more downside. They believe that MicroStrategy is going to be removed from some of the stock indices. And that's probably going to occur, right? Like, why is that going to occur? Well, MicroStrategy, they're on the hook for about $600 to $700 million in dividends for all these preferred shares. And even though some of these preferred shares are like, they don't have to pay it, it's cumulative, meaning that if they don't pay it now, it just keeps adding up until they can pay it. And if they can't pay it, this is just going to crater all of the preferred equity prices, as well as the MicroStrategy price. Plus, Bitcoin is going into a bear market, and they're going to continue to sell shares in the open market. And this is all compressing, number one, the MNAV. Number two, it's compressing the value of the stock. And I don't see any way that this is going to reverse anytime soon. And by the way, if Bitcoin goes below their buy price, which we are very close to, if not already hit, which is about $74,000, then that means that they have to report losses on their earnings. So it's no longer, well, we made $10 billion in the quarter, when they actually made nothing. It's just on all unrealized capital gains. But now they're going to have to report losses on that. And Wall Street is not going to like that. And I think that that is not even priced into the stock yet. I personally, like I've told you guys, like earlier in 2025, I believed that MicroStrategy was going to be going from $400 to $220, and it did. We are going below $100 within the next 12 months. Almost 100% in my opinion and my analysis based on everything that we talked about. But the MicroStrategy bulls, they want to blame JP Morgan. They want to blame this one or this bank or this research firm. And at the end of the day, when you look at the market psychology chart, this is denial phase in the markets. I mean, you could see it right here. It is the denial phase. My investments are with great companies. They're going to come back. Panic is next. And we're not even in the panic phase, but we're getting close. We're getting close because they're starting to panic. They're starting to like, oh, we have to blame JP Morgan. Everybody close your bank accounts at JP Morgan. You can close all your bank accounts at JP Morgan that you want. It's not going to change the trajectory of where MicroStrategy stock price is going. And again, you guys have been ahead of this on this channel. This channel has been laying this out around the time that Jim Chanos started shorting the stock until he closed his short position in profit. And like I've said, the stock is down about 40, 50, 60% since the middle of 2025. And if you have been betting against the stock, you have been printing money as all of these MicroStrategy bulls continue to just stick in their thesis instead of adjusting their thesis, adjusting their strategy. They are prolonging the bear market. And by the way, we're not even in the bear market yet. We're rotating into the bear market. We're not in the bear market. The downtrend has just begun, and they're saying buy the dip, buy the dip, buy the dip, support Michael Saylor. It's like, it's not that I don't support Michael Saylor, but what he is doing from the company's perspective, instead of building businesses over the last year with all the money that he's raising to actually get cash flow. And I'm not saying spend all the money that they raised into business building, but at least get some cash flow. No cash flow. It's all debt issuance, new debt facilities, and over the long term, this could work out, especially if Bitcoin does go much, much higher. But it's going to be really rough in the bear market, really, really rough. And so we're already down to 170. Going under $100 is another 50% drop. And I think that we are going to be there very, very soon. Because as Bitcoin drops, it's going to really test what MicroStrategy is able to do from raising money perspective, which is getting harder and harder, especially all their preferreds are now under par. Par is 100. All of these preferreds should be at 100. So as that basically means there's not a lot of demand. And so if they're selling more of these preferreds into the market to raise more money, it's going to continue to dilute it and the share price is going to continue to go down. But they're still paying the dividend at par, which is 100. So that doesn't change. The yield just technically goes up. With that, I really want to know what you guys think about this entire market. Where are we? Do you see the top signals like I do? And where are we going from here? Let me know down below in the comments. While you're there, don't forget to give the video a thumbs up, hit the subscribe button, and make sure you guys check out our other videos on this channel. We upload every single day to bring you the latest happening in the financial world. See you guys in the next video. Thanks for watching.